Futures suggest a downside move at the opening bell, but it will not be severe. Down 70 maybe for the Dow. That's at the opening bell. Don't know how we're going to close. Eddie Ghabour is back. Uh-oh, here we go. You've been telling us for a year and a half you're not in the market. Any change?
Look, Stuart, right now, no. We have a lot of cash. We haven't been buying this bear market bounce that we had in January, as you know, because we've told our clients we believe the recession is officially underway. And it's not based on a gut feeling. It's based on data. Look at the yield curve today. The 2s and 10s are inverted by nearly 90 basis points. That's a major signal that people should not ignore, along with the strength in the dollar. These retailers are coming out with earnings, and they're revising down, as we shared with clients, as we expected. And they're revising down forward-looking with full employment. What's going to happen when unemployment starts to tick up? Usually their first revision down is not going to be their last, so it's going to be interesting to see what happens. And look what's happening now. We've talked about commercial real estate concerns with your viewers. We're starting to see defaults in that space, and we're also seeing some major REITs that are now freezing redemptions. These are signs of a recession that's accelerating at a much faster pace than I believe the market is pricing in. And I think that it's going to be a very, very tough, hard landing, not a soft landing. And by summer, it'll be crystal clear that we are in a recession, in my opinion.
So you have not changed your outlook at all. It's still the same. Now, is there anything you would buy? I'm talking about stocks now. Is there any stock that you would buy right now or in the near future?
Right now, the answer is no. If we get a sell-off and get a VIX spike into the 30s, we would look to add a little bit to healthcare. But we're going to be very, very patient on the equity side. We think the best opportunities here in the near term is on the fixed income side, and we are taking advantage of the volatility and interest rates. But on the equity side, we're going to continue to be patient because we still believe we're going to hit new lows before we hit new highs in the coming months.
So you take control of your clients' money and you tell them where to put it. And as I understand it, your clients at the moment are 80% in cash. Is that right? You're almost all in cash. Is that correct?
A majority are in that position. Every client situation is different, but yes, we have an extremely high cash position. One of our strategies is at the 70% because we deployed 10% into fixed income over the last week. But we're probably in those strategies at 8 to 9% equities. And look, as a fiduciary, when I see these warning signs and seeing the data deteriorate, the easiest thing for me to do is say, oh, just stay the course, it will come back. But I can't do that. You have to be active, and every once in a while, it pays to just do nothing, sit on the sidelines, be patient, because the best opportunities almost always come in a recession.
Then you've got to be confident that you time your re-entry into the market just right. Come back soon, Eddie Ghabour. I know we'll see you soon.